China is making its boldest move yet on the global stage. In early 2025, Beijing announced a series of sweeping economic partnerships with Southeast Asia and the Gulf states. This is more than a trade deal. It's the birth of a new world order, an economic bloc that could redraw the global map. The ambition is clear. China wants to create a network that rivals the US-led system. By linking its vast market with resource-rich Gulf countries and dynamic Southeast Asian economies, China is challenging decades of Western dominance. This bloc is about more than money. It's about who sets the rules for trade, technology, and energy. So why now? The world is more divided than ever. Trade wars, sanctions, and shifting alliances have left many countries looking for new partners. China sees its chance. It is using both its economic strength and its political influence to bring others into its orbit. This essay explores how China is building this new alliance. We will look at the size of the bloc, what makes it unique, and how it is changing the world, from energy markets to global politics. The numbers behind this new bloc are staggering. If you add up China, Southeast Asia, and the Gulf states, you get a group that covers more than 3.5 billion people. That's almost half the world's population, living in some of the world's most important regions. Economically, the bloc is just as impressive. Together they produce goods and services worth over $30 trillion a year. This puts them nearly on par with the combined economies of the US and Europe, but it's not just size that matters. The bloc controls critical sea lanes, including the South China Sea and the Strait of Hormuz. These are the arteries of global trade and energy. The alliance also brings together different strengths. China is a manufacturing and tech giant. Southeast Asia offers a young workforce and fast-growing markets. The Gulf states have deep pockets and vast energy reserves. By working together, they can cover each other's weaknesses and multiply their power. The impact goes beyond economics. This bloc can set new standards for technology, energy, and investment. It can influence global prices, supply chains, and even the rules of the digital world. At first glance, this alliance may look like BRICS, the group made up of Brazil, Russia, India, China, and South Africa, but there are big differences. BRICS has always struggled with internal rivalries and a lack of focus. Its members are spread across the globe with very different agendas. China's new bloc is more concentrated. The countries are closer, both geographically and economically. Southeast Asia and the Gulf states already trade more with China than with the West. Their supply chains and investments are linked in real time. Unlike BRICS, this bloc is not just an annual meeting, it's a daily reality. Another key difference is leadership. In BRICS, China had to share the stage with India and Russia. In this new alliance, Beijing is clearly in charge. It sets the agenda and provides the muscle. For many partners, this is actually an advantage. They get access to China's markets, money, and know-how without the political noise. Finally, this bloc is not about opposing the West for its own sake. It is about building practical connections, trade routes, energy pipelines, and digital networks. The focus is on results, not ideology. How is China making this alliance real? The answer is simple: by building things. Trade deals are being signed at a record pace. Chinese companies are pouring billions into Southeast Asian ports, highways, and rail lines. In the Gulf, new pipelines and refineries are coming online with Chinese investment. One example is the China-Laos Railway, which now connects Kunming in China to Vientiane in Laos. This is just one part of a wider web of trains, roads, and ports linking China to Malaysia, Thailand, and Singapore. In the Gulf, China is building solar farms in Saudi Arabia and major industrial zones in the UAE. Energy is at the heart of these projects. China is locking in long-term deals for oil and gas, but also leading the shift to renewables. It is helping build some of the world's largest solar and wind farms, both at home and across Asia and the Gulf. These connections are not just physical, digital links are growing too. Chinese telecoms and e-commerce giants are expanding across Asia, bringing millions of people into the digital economy. Let's look at how this plays out in real countries. Take Indonesia, the largest economy in Southeast Asia. Chinese investment has built new highways, ports, and even a high-speed rail line connecting Jakarta and Bandung. Trade between the two countries hit a record at $130 billion last year. Vietnam is also moving closer to China, even as it keeps its independence. Chinese companies make up a growing share of Vietnam's electronics exports. At the same time, Vietnamese firms are teaming up with Chinese giants to build new factories and research centers. Malaysia is another key player. It hosts one of China's Belt and Road signature projects, the East Coast Rail Link. This project is reshaping how goods move across the country, turning Malaysia into a hub for the whole region. In the Gulf, Saudi Arabia is now China's top oil supplier. The two countries are working together on energy, but also on smart cities and tech partnerships. The UAE is investing heavily in Chinese digital platforms and green technology. As these countries move closer to China, Western influence is fading. US and European investments in Southeast Asia and the Gulf are stagnating or even shrinking. Many local leaders say the West is slow, distracted by its own problems, and not always reliable. Trade numbers tell the story. China is now the top trading partner for almost every country in Southeast Asia. In the Gulf, Chinese banks and businesses are outpacing their Western rivals. Even Europe's biggest companies are being forced to choose between the Chinese and Western systems. This shift is not just about money, it is also about politics. When the US and EU criticize local governments, leaders in Asia and the Gulf now have options. They can turn to China for support. Financial, diplomatic, and technical. Western officials are worried. They warn about debt traps and authoritarian influence. But for many countries, the benefits of the new alliance are clear: fast funding, new jobs, and a bigger say in global affairs. The energy game is changing fast. For decades, oil and gas were traded in US dollars. Now China and its partners are making deals in yuan and other currencies. Saudi Arabia and the UAE have begun accepting Chinese yuan for some oil sales. This is a big deal. It reduces the power of the dollar and the US financial system. More countries are joining in, using local currencies for trade. This makes them less vulnerable to sanctions and dollar shortages. Renewable energy is another key trend. China is the world's top maker of solar panels, wind turbines, and electric cars. It is exporting this technology across Asia and the Gulf. New solar farms in the deserts of Saudi Arabia and wind farms in Vietnam are just the start. This shift is not just about business, it is about who controls the future of energy. China wants to lead in both old and new energy, and so far, it is winning. The connections between China, Southeast Asia, and the Gulf go beyond trade and energy. Technology is a new frontier. Chinese 5G networks, e-commerce platforms, and digital payment systems are spreading rapidly. Countries like Malaysia and the UAE are testing Chinese AI tools in health, security, and finance. Investment is rising too. Chinese banks are funding everything from real estate in Dubai to startups in Singapore. Joint investment funds are creating new links between stock markets in Shanghai, Abu Dhabi, and Jakarta. Political unity is also emerging. At the 2025 Kuala Lumpur summit, leaders from across the bloc announced plans for a new Asia-Gulf economic corridor. They called for joint standards on trade, technology, and green energy. The message was clear. They want to shape the world, not just follow it. The question now is how many more countries will join this new system? As the bloc grows, it could become the center of global trade and politics, leaving the old order behind.